This podcast is made possible by Vena.
Hi, this is Ryan Van Hatten, the CFO from Profix Software, and you're listening to the CFO Thought Leader podcast.
This is episode 863.
What is the cultivation cost per pound is a big metric. Yield per square foot is a big metric because the more product you can yield per plant per square foot, it goes straight to the bottom line. So that's a key metric for the organization. And then just as you can imagine on the cash flow management side, capital is scarce these days. And in an environment like this, it's really keeping a close eye on our cash, on our CapEx spending, on taxes, lots of work going on there to minimize taxes. We've done a lot of restructuring of our balance sheet, reducing our debt, reducing our interest expense, all across the board.
Hi, it's Jack. On today's episode, we speak with Keith Stauffer, CFO of TerrAscend. Back in the early to mid-1990s, Keith Stauffer was a junior member of Procter & Gamble's finance team when his hand shot up for the first time. The finance analyst was about to complete his first project at P&G when he saw an opening at P&G's plant operation in Puerto Rico. Over the next few years, Stauffer got to boost his Spanish language skills while adding the title Plant Finance Manager to his resume. A resume that in the years ahead would expand to include finance career-building stints in Singapore, Spain, and the United Kingdom. And Stauffer didn't go it alone. He brought the family along, a feat we've seldom heard about before. But like so many finance adventures, you'll hear it here first on today's episode. We begin after this. Managing multiple spreadsheets, disconnected data, numbers you just can't trust. Your finance team can't be the strategic partner your organization needs right now with obstacles like that getting in your way. Vena can change that. Vena brings people, processes, and systems together in a single collaborative analytical platform so you can drive connected business planning and better decision making. And it's the only native Excel complete planning platform built for Microsoft 365 with Power BI embedded. With Vena, your financial and operational data is always connected, and your teams are always armed with insights and time to focus on what matters most. So when the stakes are high and the margin for error low, plan with agility, plan with resilience, plan with Vena so you can be prepared for whatever comes next. Visit venasolutions.com/planningaces to learn more about how Vena will help you plan for anything. Hello, we're speaking with Keith Stauffer, CFO of TerrAscend. Keith, welcome.
Thank you. Thanks for having me.
So, Keith, we always begin by asking our guests to look back for us and sharing some of the experiences they feel prepared them for this role. I just want to give our listeners a little bit of a heads up. Keith has quite a resume. He spent his career building years at P&G, Dell, and Hershey. So these are all marquee companies, and I'm sure we'll hear about some of them. But Keith, forgive me for prolonging this. Tell us, what comes to mind when we ask for those experiences?
Yeah, sure. I mean, it's been an exciting journey. It's hard to believe it's coming up on 30 years of a career. It's hard to think about myself that way, but it has been almost 30 years. And yes, most of those years spent with the companies you mentioned. First 5 years of my career with P&G, 10 years or so with Dell, 10 years with Hershey, and the last few years where I am, I've had 15 or 16 different roles across 4 or 5 companies in those 30 years. So quite a variety of moving around, developing myself, challenging myself. Quite a few of those years in international environments, either managing international businesses and or living overseas on essentially every continent in the world. So what I've learned about myself over all that time is that I'm an adventure seeker. I like to challenge myself. I like to always be learning, and that's kind of what's encapsulated in what I mentioned.
Did you relocate with, was it with Dell, or which companies were you overseas with?
So early on with P&G, I raised my hand at sort of the tail end of my first assignment out of college, and I had my eyes set on an opportunity in Puerto Rico. They gladly chose me, and that was my first kind of foray, if you want to call that, overseas. And then that adventure seeking just continued. When I moved to Dell, similar thing happened. 3-4 years into my time at Dell, they needed somebody over in Spain to run to be CFO of Spain and Portugal. So raised my hand for that. Then something came up in the UK. They moved me to the UK to head up FP&A for Europe. And then the fourth international experience came in the middle of my time with Hershey. Hershey was building an international business, and in particular in Asia, focused in China and India and the rest of Asia Pacific. And again, raised my hand for that one, and had that opportunity.
The first two opportunities you mentioned, Puerto Rico and then Spain and Portugal, were you bilingual? Was there a motivating force behind it so early in your career to take that jump?
Yeah, I think that, again, it goes back to this theme. I think I've always been an adventure seeker, open to opportunities. Some people might be gun shy about moving to an unfamiliar location and not knowing a language. I don't know, for whatever innate reason, I've always had the opposite feeling, like more of glass half full and what the potential is. And so, long story short, no, I didn't speak a word of Spanish. They quickly gave me a tutor. P&G did, and really just kind of boned up on Spanish and became conversant and learned the language proficiently enough to then be, let's say, qualified when I was at Dell, and they approached me on the opportunity in Spain. And again, I think one thing leads to another, and it opens up doors for you over your career or your life.
Interesting, because on paper you look rather like a traditional path you're taking, but we see that your geography hopping in certain corporate environments, executives don't like to necessarily move overseas. Sometimes they think they move away from the mothership, there'll be less opportunities to get ahead. They'll be less visible, I suppose. You were never feared such a
No,
situation.
I always had the opposite view. And even with, I have 3 kids, and I even felt the same way with my family, because a lot of people hesitate on opportunities like that because their kids are a certain age or going into a certain grade. And I always had the opposite view of giving everybody those opportunities to see the broader view of the world, and you learn and you grow and you develop that way. And I always approached my career that way as well. So
So your family, you began raising your family overseas as well as you.
yes, yes. So my oldest, who's 21 now, was 1 year old when we moved to Spain, 2 years old maybe. And then my middle son was born in the UK, and then yeah, my third son was born in the US. But then we all lived in Singapore, and they were in grade school when we lived in Singapore. And they're better. I think they're better young men because of some of those experiences.
Wanted to you have these, as we've been talking about, these three marquee companies: Hershey, Dell, P&G. The notion that you have a sense of their finance functions and how they operate and the corporate cultures within each of those companies Anything you can share about from a point of comparison with us?
Yeah, sure. I think P&G, of course, is a well-known company. It's changed over time. I'm fairly far removed from my P&G days of 25 years ago, but the first 5 years of my career and throughout all those decades, I think P&G was always known as sort of uh, um, however you want to characterize it, kind of a blue chip kind of development company, grooming people, and that's how I kind of remember my initial years at P&G. And it was only a few short assignments in the 5 years. I had three different assignments, but really just kind of learning the ropes, getting grounded in some of the basics of finance and corporate finance and how to be a business partner, and not really maybe creating too much because the processes were already pretty well developed and created, but learning how to manage in those environments. And so I would say that would be how I characterize that chapter. And then sticking with this adventure theme, the reason why I moved to Dell is I had a former P&G colleague who left P&G, went to Dell ahead of me, and then kept calling me and convincing me I need to come down. This was the late 90s and Dell in its heyday, and best performing stock of the 90s and all this stuff and hyper growth. And it just appealed to my adventure seeking. And so eventually took him up on his offer, came down, met with some people, and that's how I landed at Dell. And I would characterize those 10 years as really high growth years throughout all my assignments. Dell was growing like gangbusters through most of those years, and just really how to handle growth, how to deal with growth as a finance person in different roles, building, creating, hiring, all those things. And so, and really dealing with imperfection, dealing with ambiguity, being resilient. Those are, I think, soft skills that I built through all those years at Dell. And then Hershey was sort of like a pivot back to a more developed company. But again, I spent probably 7 or 8 of my 10 years at Hershey on the international side of the business, which was much less developed. And so it was building businesses in emerging markets like Mexico, Brazil, India, and China, like I mentioned, Canada, which was a bit more developed. And so it was sort of a combination of leveraging some of the systems and processes that were developed from my days at P&G, but then also leveraging the skills that I developed over the years at Dell in terms of managing growth, building new markets, entering new geographies, that kind of thing. So kind of an interesting mix between those three companies.
So at some point in your career, you started saying, okay, I'd like, and maybe it was conversations you had with executive search executives, I'd like to see myself in a CFO role within the next, I don't know how many, 5 years or 10 years. How do we make that happen? What is the path I need to take? And here you have all this, and I would imagine they would say, well, I think I could get you a CFO of Europe role pretty quickly. You might say, no, that's not what I wanted. I'd like to try to get to the top. And I'm finding, and I guess my question is, did your offshore experience suddenly start making you sort of a target for offshore CFO roles rather than the top job?
Yes. And the first part of your question, I would say yes. At some point, I felt convinced myself what my goals were or as I was developing in my career. My goal became, yes, I really have my sights set on becoming a CFO of a public company. How do I get there? What else do I need to develop myself? And you're never exactly ready, I don't think, but you need to be ready enough to get that opportunity, to get that call. And I think at some point in time, I became ready enough through, again, the rotation through 10 to 15 different assignments of various capacities. And so I think that's when I started getting calls for those types of roles. And yes, the calls before were for more kind of, like you said, a CFO of Europe of a division of a company, and I felt like I just wasn't continuing to grow as much as I wanted to in terms of what's that next step and what's that next challenge. And if you just sort of level off and continue to do the same thing, then you don't want to atrophy, if you will, from that standpoint. So that's when, that's kind of how I ended up where I am now.
And again, at Hershey, you were a vice president of finance. You do step into another senior role at Coty. Is that right? The company, it's a fairly sizable company, I believe. How big is that company for those of us who might know?
Yeah, Coty was a brief time for me. I left Hershey to take that role. Coty was about an $8 billion company. They divested some of their divisions, but at the time it was about an $8 billion company with 3 global divisions. And so I took a role there as the head of finance for the largest global division, which was the consumer beauty business, which acquired many of the beauty brands, cosmetics brands from P&G, actually. And so I sort of was back with a lot of P&G people that were acquired by Coty when P&G divested their beauty business. And so that was a big turnaround because that business was not very well positioned from a brand positioning standpoint. When you think brands like CoverGirl, like Clairol, kind of older, tired brands that weren't demographically well positioned. And so the challenge was across all the division, how do we come together as a leadership team and architect a turnaround plan for this global business, which we did. And so that's during my time there, that's what I did until I got the call from TerrAscend, or actually from the recruiter.
Yeah, for the CFO opportunity that you'd been waiting for. And I have to say, if you look at your resume, again, what's also interesting about it is you were fearless as far as industry. You were just mentioning how Coty was beauty. Before that, it was Hershey. Before that was Dell. Many people probably would have thought there was no coming back. Once you're at Dell, you're in tech and you would have jumped to tech. But no, that's not true for you. And so, of course, when the CFO opportunity comes, we shouldn't be surprised that it's a cannabis, vertically integrated cannabis, sizable company, leading company. But once again, you're willing to go down that path. Tell us about TerrAscend, and then we'll come back and we'll pose some more questions about how some of your decision-making going there. But tell us about this opportunity that TerrAscend is targeting and how this company's being built.
Sure. And maybe I'll start out by saying I believe, you can go down different paths in finance, but I think I generally feel like as a finance professional, you can cross industries. Some people do, some people don't. I certainly have crossed back and forth. I have many former Dell colleagues that I keep in touch with that have stayed in tech in various capacities, but I like that versatility and not being boxed into one industry. So that's on the first part. So again, kind of felt like I was preparing myself all along when I got a call and started getting calls on public company CFO roles. I got a call from a recruiter called Cannabiz, which is interesting. Never heard of them, of course, because you typically hear the big 5 and maybe a few others, and was actually, in hindsight, I guess I'm happy that I had the open mind to at least take a call and listen, because at first it wasn't something that necessarily would have been on my radar in terms of size, because I'm used to dealing with big numbers and big companies, and I'm glad that I had that open mind because at the time, it would have been early 2020, TerrAscend had just reported their results for 2019, and it was like a less than $100 million company. So why would I do that? But I'm glad I looked beyond the numbers, because it's not about the size of the numbers. It's about the quality of the experience that you're getting. And I look back on that now, and I'm glad I did that because of the last few years and how beneficial they've been. So it was really that call up front. And as anyone would go through, kind of going through that process with a recruiter, learning about the company. It was a pretty quick process. So it was only a few week process because they were looking to move fast. And it's just something where I started to do my research and became very quickly like so excited and it just enamored by the business opportunity. It was completely off my radar. I knew nothing about it, but as I dug into it and saw this $80 billion consumer industry that already existed, but it just mostly existed in the dark and not state by state regulated legal, and saw that all these states are legalizing and it's converting by the tens of billions of dollars every couple years. That's a huge business opportunity, and where that could go and how brands could be built and how consumer usage occasions. And it was like all the same language almost as at P&G or at Hershey, and it's just a different consumer product.
Now, TerrAscend is was publicly held, as you explained. So you could, you had the numbers. The numbers had been reported regularly. You could do some homework and dig into it without having necessarily to. I'm sure you toured their properties and what have you. But can you tell us something more? What sets TerrAscend apart? What is it that other types of cannabis operations are not yet mature enough, perhaps?
Yeah, sure. And maybe I'll double back there just on the overview of TerrAscend. So TerrAscend is what most people in the industry would call a multi-state operator. So we would be kind of a top 7 or so, certainly top 10 multi-state operator. There's maybe a few more publicly traded. There are more private companies that are multi-state operators, and what the term means is exactly what it says. So TerrAscend, in our case, we operate in 5 states: Pennsylvania, New Jersey, Maryland, Michigan, California, and we originally started the company in Canada, so we still have a Canada business as well. And there are other companies out there like that operate in more states, upwards of 10, even 20 plus states. So there are handful of larger companies. But what differentiates TerrAscend, I believe, and we still believe with the strategy, the path that we're on, is that we're deeper in fewer states so that we can really penetrate and run a vertically integrated operation and not spread ourselves too thin, because it's very capital intensive. And that allows us to go deeper, become more profitable over time, gain a larger market share within each of the states that we're operating, and build our brands. And so that's what I believe, not completely differentiates, but is one of the differentiators of TerrAscend relative to some of our peers.
Can you maybe, when did it go public? And curious about its capital structure. Were there early investors? And could you give us maybe an abbreviated history?
Yes. And it also builds on what else differentiates, because we have a couple of strong partners and capital backing. So we went public in 2017, end of 2017. And our chairman, his name's Jason Wild, he still owns about 20% of the shares of the company. So he's a major backer. He runs a hedge fund, and so a lot of his fund is invested in, so he kind of crosses, but has, at one point, the hedge fund was about $2 billion. So a lot of that money is invested in TerrAscend. So we have that backing. We also announced, actually just a week ago Friday, we announced that Canopy Growth, which is a pretty well-known cannabis company out there, probably the most well-known. They operate in Canada, and they have a strong backing by Constellation Brands, which has a $4 or $5 billion investment in Canopy Growth, mostly because beverage companies believe that cannabis at some point in time will overlap and possibly steal consumer occasions from the alcohol business. And so that was a strategic investment from Constellation into Canopy. Canopy owns 20+% of TerrAscend. So that's another strong capital backing of our company. They're non-voting exchangeable shares, they're called, because they can't technically own our shares because they operate in Canada. And it's a complicated thing to explain in a few minutes, but given the federal illegality of cannabis in the US, it's still a state by state legal regulated business. And so there's some complications there, which become interesting when we talk about just some of the fun about this job that I'm in, kind of breaking new ground every day that I wake up in the morning.
So curious, when you arrive, is there anything you did to reorganize finance? Did you maybe there's some top talent that you hired, or you brought new systems? Anything you can share with us as to how you structured finance?
Yeah, for sure. That's what has been so much fun, really, in 2.5 or so years. I can't imagine in any of my other 14 or so assignments that I mentioned over my career having the opportunity to do this much in such a short period of time. So everything from, like you said, right away, I had to hire several new team members because it was really part of the remit was build a team. And so since the company started in Canada, they just made the pivot into the US when they hired a new CEO that was New York based. And then that CEO hired me and started building out a new executive team that was based in the US. And then I had to start to do the same thing with the finance team, is really build a hub of a finance team. And so hired a corporate FP&A person, a corporate controller, a head of tax, several people under those people, stood up an external reporting team. So several hires. By the way, with the help of the recruiter that helped bring me into TerrAscend Cannabis. So really partnering with them. They helped me fill several roles, built out the team, and then several other things on the journey along with that, as you could imagine, in sort of a startup type environment, putting new systems in place. We were an IFRS reporting company and a foreign private issuer. So we weren't a US filer. We converted to US GAAP. We became a US filer with the SEC just this past year. And we're now subject to SOX compliance as well, given that we're SEC. So a lot of the work across the company is putting the controls in place, becoming SOX compliant. So myself and our CEO can sign off for the first time this year for 2022 on our 10K and certify to SOX. So lots of groundbreaking foundation building work that's occurred over the past couple of years.
Now, as far as when you were attempting to understand better how the company was performing or investments were being made, did you have all the visibility you needed? Did you do anything to achieve greater visibility? Or did you look to educate part of the organization better in terms of the numbers they were looking at regularly? Here's something you guys need to pay attention to.
Maybe not like groundbreaking. I'd say it was continual building. When it was a smaller company, it was controlled in a different way and with different information. Certainly, we've had to build over time. I failed to mention in this 2 years, we've also acquired 5 companies. And so there's quite a bit of change that comes with that in terms of integrating the companies. A lot of these companies that we acquire are smaller private companies that are on QuickBooks and just like basic information. And so stitching all that together, which is why we needed to implement an ERP platform to get off of various versions of QuickBooks and everything. And so it was all available. It's just a matter of like how hard and manual it is to get it information. And I think over time, not to say we're fully automated, but we have just again, with the team building, with the process building, we have, I would say, again, coming from the backgrounds I come from, a pretty well run in terms of all the quality of the information we need. We are vertically integrated, so it is complicated. So we do need to have KPIs and measurements in place on the retail side, transactions, store traffic, average basket size, product mix, third-party sales in our retail store versus our own product sales in our retail store. There's all kinds of information that we use to manage the business effectively. And then, of course, what are the product costs? What are the gross margins, et cetera? And then the same thing on the cultivation side. We grow, we package, we manufacture, we extract oils. We have a full array of manufactured product portfolio. And then we sell that to our own retail stores, and we also sell that product to other retail stores as a branded manufacturer and wholesaler. So there's a pretty complicated business from that standpoint, and we have a lot of key measurements in place. What is the cultivation cost per pound is a big metric. Yield per square foot is a big metric, because the more product you can yield per plant per square foot, it goes straight to the bottom line. So that's a key metric for the organization. So that's a lot of operating, and then just as you can imagine on the cash flow management side, capital is scarce these days, and in a environment like this, it's really keeping a close eye on our cash, on our capex spending, on taxes. Lots of work going on there to minimize taxes. We've done a lot of restructuring of our balance sheet, reducing our debt, reducing our interest expense. So really, yeah, I mean, all across the board, but I'd say a pretty holistic, comprehensive suite of information and reporting that we have to run the company.
And your timing seems to have been that you arrive as COVID is back in 2020, just really arrives and opens up, and everyone begins shutting down. Is the finance team operating virtually? I know you have retail stores which can't, clearly, and you have production facilities that need people on premise, but maybe finance can be virtual.
We are, and I started in April of 2020, right smack in the middle of COVID, and everybody on lockdown, and all my time has been virtual. Not to say we don't get out and meet, we do, but in the deep days of COVID, nobody got out, right? So we all figured out how to do this over video, and I think everybody essentially adapted to that. And I know every company's different, and some people are going back into the office and all that, but I think given our structure, we have corporate teams that are sort of spread out, so we continue to work virtually, not just within finance, but across legal and IT and the rest of the HR, the rest of the functions. We do have our retail stores that are open, and people are obviously managing in store. We have office locations in our different businesses in Michigan and Pennsylvania and California. So we get around, I get around, the executive team does, out to our operations. We meet. So it's sort of a hybrid environment. I'd say largely virtual and highly productive, maybe sometimes overly productive, which is the other extreme we're all dealing with, right? Where do you stop? Where's the line? Yeah, that's how we operate. And it's been, I think it's kind of the new normal at this point.
We obviously like to focus on lines of sight and new ways of looking at the business and measuring it. And I'm wondering if there was a metric that you hadn't used in business pretty much before. Maybe it's the yield metric that you already shared, or maybe it's a way of looking at this business. You had sort of an epiphany along the way. Here's where I got to focus, or something else that surprised you about this business and made you begin to adopt a different metrics or different way of looking at it. Anything as I try to press down on that?
Yeah, I think you called it out. I think the unique one is this yield per square foot, which drives so much. It's hard to describe, but every gram more we get per square foot is so much value. And so our teams are hyper focused on that metric because it drives your gross margin. And in most businesses, especially consumer businesses, throughout my entire career, that's what drives the company. You need to drive the gross margin, drive the costs down. That gives you the fuel to invest in marketing, to invest in the brands. And it's the same cycle in this company because it's a consumer company. So the more we can squeeze out of that cost per gram yield, that really drives the value of the company. And that's a unique metric. And again, lots of other I'd call more normal ways of looking at things in terms of product costing, product mix, pricing, discounting, all those normal things to run a business. But that's a unique one here, is the yield per square foot.
Well, thank you for the extra detail there. That's helpful. We always like to ask for a finance strategic moment. This could have happened anytime during the course of your career, But it's a moment where you saw something in the numbers, just given your role as a finance executive, senior finance leader. You saw something and you responded to it. Does anything come to mind when we ask for a finance strategic moment?
Yeah, so maybe several, but I'll go back to one in particular, and I think sometimes we learn more from our from failures than we do from successes. And I can think back to a time when I was at Hershey, living in Asia, like I mentioned earlier, and one of our strategic focus areas was building a business in China. And the context of that was that Hershey was very late to the game internationally. Mars had about a 50% market share in China, and China was already a several $100 million chocolate market and growing rapidly. Ferrero had another 30% or so market share, and that was what Hershey was entering into. And so we started building a business organically, hiring salespeople, hiring marketing people. We acquired a manufacturing facility. We started producing our own product in country, building a distribution system, launching our brands. And we did all that. And then what came along, we were also focused on M&A. And what came along was an opportunity to acquire a private, local, Chinese confection company called Golden Monkey. And we ended up going through the whole process. We ended up acquiring the business, and it turned out to be a disaster for many reasons. And I could go on. I mean, the lessons, most typical lessons like culture, disparities, and not having done the full diligence properly, either from a financial or legal standpoint, and uncovering skeletons post acquisition that were sort of insurmountable and nonstop. And so eventually, after a couple of years' effort, we pulled the plug and divested the business. So maybe a difficult lesson learned, but a very valuable lesson learned in terms of some of the trip ups that many companies make in terms of acquiring businesses. And as a finance leader in that situation, I learned a lot personally of what could be done better. And certainly it's not all on me or all on any one person with such a large acquisition. It's a team of people, but individually, as a finance leader in that situation, I learned a lot about what to do the next time and what not to do.
Next time, a strategic alliance instead of an acquisition, did they continue to acquire or partner instead?
It was more doubling back down on the organic strategy and building Hershey's own brands versus there were just some premises that were flawed in terms of, oh, okay, this company has access to different distribution channels than we have. And so rather than building distribution, we'll buy distribution, and some concepts like that didn't quite work out as they were mapped out on paper. So it was really kind of going back to the drawing board and doubling down on the organic strategy.
Sweeney, I hope you're enjoying our talk with CFO Keith Stauffer of TerrAscend. Having just touched upon his stint with Hershey in the Far East, interestingly, I was just doing the math. He mentioned up front that he had a son who was 21 years of age today. Well, he was in Singapore around 2013, 2015. So we can take 8 or 10 years off of his 21-year-old son. We're talking about a high schooler or a middle schooler, really, with 2 brothers underneath. So he traveled or transferred to Singapore with 3 children, school-age children. No small feat. And I wish I had a moment to ask him that. I didn't do the math in my head at the time. But we don't see that too often, at least for American executives moving their families like that. And as he said, he had a whole different take on that. Interesting. It certainly sets Keith Stauffer apart from the pack of finance career builders in an interesting way. We'll now return to our talk with CFO Keith Stauffer. We'd like to end with our mentoring round, where we ask you a series of quick questions intended to inspire and inform future finance leaders. We want you to think about your first, and we touched on this a little bit, but your first 30 days, 60 days as CFO of TerrAscend. If you could go back and just give yourself a piece of advice in 2020, it wasn't all that long ago, but there's just some piece of information as a new CFO you wish you might have had. What would that be if you could go back and whisper in your own ear?
I would say maybe not exactly first 30 or 60, but it's on the earlier day side. And this is a lesson that maybe is somewhat common among CFOs. But when you go to raise money, I don't know if this answers your question, but when you go to raise money and you go to the capital markets, make sure you take enough while you're going to get it. And so we went and we raised $175 million of equity capital in my early days with the company, which I knew we had to do when I joined as part of the discussions. And I kind of wish we would have gone for 250, and I know we could have gotten 250 at a very good price. And so that's one of many lessons learned. But I think it's a valuable one that I hear a lot from people is when you're going out to the markets, get more than you think you'll ever need.
Excellent. Thank you. We also ask our guests to reflect a little bit on the personal side. We want to find out something about you that not everyone might know, really. We're wondering if you have a habit or maybe part of a daily routine that you do that you're known for. A family member might point this out to us more than a work colleague. I don't know, just something you do, something you're known for. Keith's always done that. Don't know why. Trying to get away from exercising and the more typical stuff. Something that sets you apart from others.
Okay. I was going to use exercise because I've been a runner my entire life and I run every day. I'm sort of answering your question the wrong way of how you asked it, but it's so important to me that it's everybody, to your point, everybody knows in work, in family, especially in the physical world. Back when I worked 10 years at Hershey, everybody knew at lunchtime I went running. There was a locker room. I left. That was my lunch hour, and it's sometimes I come up with my best ideas, my best reflections on what happened in a meeting, some breakthrough that I come back with and write it down right away, and it balances me and it keeps me kind of stress balanced and everything. And it's just always been a part of me. And 6 out of 7 days every week, it's what I do.
And likewise, when you lived in other parts of the world, running was still part of your regimen?
Nonstop. In fact, from a personal standpoint, some of my best memories in world travels are alone running in a new city.
Great detail there for us. Thank you for that. I'd like to ask if you have a book recommendation for us. Doesn't have to be a business book. Might be something that made an impression on you 10 years ago, 20 years ago. Could have been something you read last week. Don't know. Anything come to mind?
I'll stick close in with cannabis and say there's a book for those that are interested in learning about cannabis or cannabis stocks. It's called Investing in Cannabis by a guy by the name of Dan Aarons, who runs an ETF called MSOS is the ticker symbol. MSOS. It's traded on the New York Stock Exchange, and it's an interesting tutorial on the industry.
Did you did you read the book before you joined, or was it something you came upon early as you evaluated joining TerrAscend?
It didn't come out before I joined. It was shortly after I joined when the ETF launched. But it's definitely informative and helps to understand, along with everything else I need to keep track of in terms of our peers and our competitors. Just helps to understand the fundamentals of what moves the stocks and things like that.
Excellent. Well, we're up to our final question where I get to ask you to look forward finally, and we'd like to know what your priorities are as CFO of TerrAscend.
Yeah, like in terms of the next year or so?
Yes. Forgive me, the next 12 months.
Yeah. Okay, great. I mean, it's great timing because right now we're going through that process together as an executive team and developing objectives, individual objectives, and then enterprise-wide objectives. And so on our plate, it's really this continues to be a consolidating industry, and so M&A continues to play a prominent role. So that's very squarely on our radar, and I play a key role in that process. So targeting our M&A strategy is one big one. I mentioned earlier, sort of operationalizing fully the SOX program because this will be the first year that we certify to that. So it's more nuts and bolts on the kind of core accounting side of things, is really ensuring that the company is on stable footing and the teams across all the businesses know what they need to do to just keep that safe control environment. Another one that I mentioned that is the lifeblood of any company is continuing to drive gross margin. And so a major initiative is continuing, lots of work underway on, again, back to that grams per square foot and cost per pound. And that's really the next frontier for us. We did a lot of work on operating expense reduction and right sizing across the company. And now that that's in place, the next frontier is really driving gross margin to be able to give us the fuel to invest more fully. So those are top three. And then we continue on the ERP systems journey. We still have some implementation to go there as well.
Keith Stauffer, thank you for joining us on CFO Thought Leader.
Thank you.
Hello, Thought Leader listeners. As you have perhaps already heard or even seen, we're now featuring the career lessons and moments of strategic insight shared by our CFO guests as Thought Leader videos. You can now find these videos on our blog at cfothoughtleader.com and, of course, our newsletters, but also on LinkedIn. If you haven't already, please go ahead and follow our CFO Thought Leader LinkedIn company page, and you'll be certain not to miss a single Thought Leader video debut. CFO Thought Leader, the #1 thought leadership platform exclusively for and by CFOs. As always, thank you for listening.